Hi, this is Mike Swanson of WallStWindow speaking with Jordan Roy Byrne, the website, thedailygoal.com. How you doing, Jordan?
Hey, I'm great, Mike. Thanks for having me.
Yeah, well, this is certainly a fascinating time to be speaking with you. It's 2:15 as we do this interview. I'm going to actually, so you know, I'm going to post it tomorrow morning, Friday. But we're doing it, the market is in a meltdown. The S&P 500 has gone below its 200-day moving average. Of course, the Dow did that before. Now the NASDAQ is getting smashed. Even the stocks we've all been told can go up forever. Apple is getting hit. Just everything's getting hit except one thing: gold and mining stocks. And I want to interview you in particular about that because in our last interview you were calling for a further drop in gold, gold to go below 1100, even the gold stocks to possibly even drop too. And last month they did that. In fact, gold stocks had a day when they were down 10%, and now I'm watching them go up. So I'm wondering, what do you think? Should I believe today's update in defiance of the weakness in the stock market, or what have your views changed since that crash has took place?
Well, I mean, we had that crash, and in the last few weeks, I was looking for gold. Remember, after it crashed, it was holding 1080 and trading between 1080 and 1100. 1080 is very significant because it's a 50% Fibonacci retracement of the entire bull market. So a lot of people were expecting it could bounce at 1080. I was thinking if it holds there and goes above 1100, it's going to go to 1140 or 1150, which it did, and we've already taken out 1150 today. I put out a free video last night, and looking at gold, the real next strong resistance is around 1175 to 1180. So I think this move that we have, I mean, today we're in the 1150s. I think it's going to continue probably for another $20, and then we'll see what happens there. Probably a sell-off. I still think gold is likely to test 1,000. I mean, gold, it sounds kind of weird to say this, but it's not that oversold to me. Looking at a lot of indicators on gold going back 40, 50 years, if you look at, now, in a long-term sense, as far as 3-4 years, gold is really oversold. I mean, I think it's probably the third worst bear market. I mean, the second worst bear market in time, probably the third worst in price. So in my opinion, it's the third worst bear market ever. But kind of in a more medium term or intermediate term sense, gold is really not that oversold, because if gold gets to 1175, I mean, 1175, that will be above the low it made last November. And also, if you look at in late 2013, I mean, it made a low below 1200. So so if gold rallies to 1175, it's going to be at the same level as it was at important lows a couple years ago. Whereas if you look at the miners, I mean, GDX's low in late 2013 was about 20. GDX is at 1583 now. Basically what I'm trying to say is the miners, so we know with gold it's about the third worst bear market ever. The miners have had the worst bear market ever. Wow. Based on all the stuff that I've looked at. I mean, the 96 to 2000 bear was really the real outlier, and we surpassed that as far in the Barron's Gold Mining Index and the XAU and in the GDX. The parent of that index is GDM, which goes back about 20 years. So the bear market in all those indices surpassed that of 96 to 2000. So essentially, the gold miners are way, way more oversold than gold is. And so given this move that we're seeing in the miners right now, I wouldn't be surprised even if we see gold test 1,000 in the next couple months. I wouldn't be surprised if the miners, maybe they make a double bottom or a slightly higher low. I mean, I think the low could be in for miners, even if we see gold drop and test 1,000 later on. And I'll also say I would prefer GDXJ to GDX because GDXJ has better fundamentals. It's been if you graph the two of them, it's really been outperforming over the last several months. I haven't looked at that chart for a couple days, but it's a clear outperformance from GDXJ, and the reason is because the companies in GDX, these are the major miners, and some of them are loaded with debt. So if we see gold test 1,000, it will be interesting because the companies with a lot of debt, they could get into some trouble, and that can drag down GDX. So I'm more focused on GDXJ, and with respect to GDXJ and the juniors, I think that they have probably bottomed. And like I said, even if we see gold test 1,000 at some point in the next 2-3 months, I think the miners, GDXJ that is, I think it's going to hold its low or make a double bottom at worst. And look, whatever happens, Mike, in the next couple months, I mean, the next pullback in the miners, I think after that one, they're really going to be ready to rip a lot higher.
Yeah, and I'll be honest, I own. I want to make 2 points. One, it is amazing what this bear market has been like in the mining stocks. I can't imagine what it would have been like to buy in 2011 and to have had to hold through this entire bear market, because I got involved in the mining stocks this time, basically last year, and took a hit in it, and then I bought again this year, and I held as they dropped. And now they're coming back, so I don't mind it. But I'm not really myself planning on buying a lot more anytime soon. I just kind of have a core position that I plan on holding through the duration. So if they go back down to the lows or whatever, I don't even really care. And then if they keep doing what they've been doing since July, performing better than the U.S. stock market, then I'm happy there too. And actually, they could even go retest their lows and still be performing better than the stock market. So I kind of look at them at this point as an asset thing in a portfolio to own is a way to diversify outside the U.S. stock market, especially gold, because I think the stock market now is really turning into a disaster.
Yeah, I mean, a quick point about the stock market. Over the last couple days or so, I was looking at the Russell 2000 and the NYSE and also the S&P 500. They were really at a point where they could possibly bounce for a little while and then have a big sell-off. The fact that as we're talking this week so far, that the U.S. equities have not been able to bounce and that they're selling off, that's a bad sign. I mean, we could see a significant decline in U.S. markets over the next couple months. I'm not saying that is going to happen. I'm just saying there is a possibility of that happening. You have to be very, very careful owning those stocks here and now, because it could get ugly over the next couple months. I'm not saying it's going to drop 50%, but if you look and you go back in the past, there's many, many times where the market has dropped 20% in a 3 or 4 month period. It's happened numerous times. So if that happens in the next couple months, I mean, people are going to panic, but it's happened before. And with the way the charts are setting up on the overall market, it's looking dangerous here. And just, Mike, one thing I like to look at is how is gold performing against all these various asset classes? How's it performing against foreign currencies? How's it performing against commodities? How's it performing against equities? Because gold's relative performance against these other markets can often lead how it performs in U.S. dollars. And gold against foreign currencies, that's corrected quite a bit in the last couple months, or since January, I should say. But it bottomed, that chart bottomed at the very end of 2013, and it's still above its long-term moving averages, which are rising. So, I mean, gold has already bottomed against foreign currencies. If you look at gold against commodities, that's nearing an all-time high. So that's great relative strength from gold. And that's, gold is looking good against energy. It's very strong against oil. And that's good for the miners, because oil is a huge cost input for most of these miners. And also back to foreign currencies, if some of these companies, their mines are in Canada or their mines are in Africa, and some countries there, are pegged to the euro, which is weak. There's a few companies who are in Australia. If you're operating in those places, your costs have not been rising. They've been falling because you're paying your costs in those local currencies, which are very weak. Now, the last thing I want to say is the one holdout has been, how is gold performing against equities? Well, one thing I checked last night, looking at gold against emerging markets, after today, that's going to close at probably a 15 or 16-month high. So that's very significant. Now, looking at gold against the S&P 500 and European stocks, it's been trending slightly down over the last 12, 18 months or so. But, we've seen a sharp rebound in the last week or two. So that's something that I'm really going to keep an eye on, because if we see gold break out against the S&P 500 and global equities, that's going to be that's really the last thing I'm looking for. When it breaks out and that happens, we're going to know that a new bull market has already begun, or it will begin very, very soon. So that's the last thing I'm looking at. In addition to how is gold going to perform when it gets up to 1175, I think there's very, very strong resistance there. So I would look for gold to back off at that point. But to what you said with being a long-term holder, there's really not a whole lot of downside. Sure, gold could go to 1,000. Sure. The miners might retest their lows, but the next round of weakness we see, that's a fantastic time to buy and just hold for 5 years, because I think there's a very good chance you're going to make a lot of money.
Yeah, if they end up going to retesting their lows, I frankly would then be tempted to really buy more. but we'll see what happens. But before you go, I would ask you. We were, before we started talking or recording this. You told me that you have a new book out. Could you tell people about that? Because people really need to get more information now in these times about gold and the markets.
Yeah, well, thanks, Mike, for giving me the opportunity to speak about it. Well, the title is The Coming Renewal of Gold's Secular Bull Market, and the subtitle is Dump Your U.S. Stocks and Prepare for the Final Run in Gold. Final run, over the next 5-6 years or so, or maybe it's 4 years, who knows. But in this ebook, well, I shouldn't call it an ebook because I feel like that kind of diminishes its value. But if you go to thedailygold.com/book, okay. If you opt in for my free newsletter, you're going to get a copy of the book. You can get a PDF copy of the book. You can print that out. I'm also sending out an ebook file that you can also download, and that's really easy to read on any Apple device. But the book, I'm focusing on really a lot of objective information as far as what really drives gold. We hear all these bizarre reasons from bulls and bears, it's the end of the world, buy gold, or, the dollar's going down, buy gold. But if you look at real interest rates, that's really the major driver of gold, and also cycles and hard assets. So when real interest rates are going down or when they're negative, that is usually when gold will rise. And, I have charts of those things going back 100 years, so you can see the very strong relationship. And also in the book, I have just lots of charts that are really actionable. We're looking at data that goes back 100 years. I have a gold against the S&P 500 chart that goes back to the 1880s. And Mike, one thing that's really, really interesting that I found is that relationship, gold against the stock market, that tends to peak every 40 to 42 years. And so then that would tell you the next peak is going to be 2020 or 2022 based on that. And usually it peaks around 4 to 5 times of the S&P 500. Well, what's the S&P today? It's trading around 2,000 or something like that, right? If gold, even if the S&P goes down to, let's say, 1,500, 4 times 1,500, that's a $6,000 gold price. And, gold doesn't have to go to 6,000 to make tons of money on it. It can go to 2,500 or 3,000, and you can make tons of money on gold, silver, or the miners. So those are really the things that I'm showing to you in the book. I'm trying to give you real objective, actionable information that'll really help you understand gold a lot better, make it a lot more simple, so you can understand, why gold goes up, why it goes down, why it performs a certain way against the stock market. And, you might disagree with me, but the book has enough actionable, objective information where you can look at that and really draw your own conclusions. I mean, I have to say it's an objective book. It's not cheerleading for gold. And again, just go to thedailygold.com/book. If you opt in, you'll get a free copy.
Well, I think by now everyone should know that you're not the type of person that simply cheerleads gold. And your call for the drop in July is a vindication of that. Well, thanks for taking the time to talk with me and everyone else, and hopefully we'll do another update soon.
Yeah, thanks so much for having me, Mike.
Thank you.